IFRS 9, quite simply, is the biggest accounting change that we have seen since the adoption of IFRS in Canada in 2011. And actually, in some situations, this change will be bigger than the change that we went through back then.
I'm Chris Wood. I'm an accounting advisory services partner with PwC Canada.
I'm Ryan Leopold. I'm a partner with PwC Canada, and I also lead our national banking and capital markets assurance practice.
Moving from an incurred credit loss model to an expected credit loss model means fundamentally changing our provisioning methodology from trying to answer the question, what's the probability that a default has occurred, to what's the probability that a default will occur. One of the biggest challenges with a model that's forward-looking like that is data availability, because in some cases it might not even exist. Data availability is important not only for the purpose of re-estimating the provisions, but also for the various new disclosures that are quite onerous.
As institutions go through this process, there's a number of key decisions that they need to figure out. How are they going to actually quantify the expected credit loss? How are they going to figure out what is a significant increase in credit risk? The standard provides some guidance, but it's up to the institution themselves to actually put that into practice. And then disclosures, transition. There's so many key decisions that need to be made. There's some institutions that we're working with where that list is approaching almost 100 key decisions in their overall project.
I think that you need to have all the various stakeholders involved in order to reach balanced solutions for the business, right? I mean, if we develop technically pure solutions in isolation, then those might not have operational practicality. When we work with our clients, we're not just bringing accounting specialists, or system specialists, but really we're bringing all the competencies to the table to be able to match up with the competencies that we believe our clients need to be bringing from within their own organizations as well.
And those stakeholders that we need to make sure that are at the table include the accounting team, but also credit, capital, systems, data, your modeling team. All these people need to be together in order to come up with a purely practical solution here. Once you figure out what the definitions are, what the answers are to the basic accounting questions, you have to actually create it. Some of it may be created by simply changing what you already have in place. In some situations, you may need to build something from scratch. If you look at this project and really feel overwhelmed of where to start, there's a couple key things that you can look at to really get this thing going. First thing is figure out what the key decisions are that you need to make. Figure out what you do know, what systems are in place, what data is available, what are you doing elsewhere within the organization today that can be useful for this project. And third, put together your plan. Figure out what those key decisions are, link them with that data, and put that into action.